Hey, what's up, everybody, and welcome back to the Tickernomics YouTube channel. In this video, I'm going to be explaining how I made a script that I recently added to the public scripts library here, which is called the sales to capital ratio 5 years back. So you can see it in the search menu here. So if I just type this in, you can see it appears here. And if we open up the code, we can see the code. So basically what I'm going to be doing in this video is going through how I made this. Now, if you look at the code, it may look a little scary. There is quite a lot of code, but it's actually very, very simple. And throughout this video, I'm going to be introducing two new functions that that you can learn and can help you with your scripting that are pretty useful. They're two functions that help you get data from past years. Because what we covered in the first tutorial video was basically how to get data, XBRL data, using this get XBRL latest function. That is the most recent form of that data. But we also want to get data from the past year, the year before that, maybe 10 years ago if you're trying to do a back test. So that's what we're going to be covering in this video. Now, a quick explanation as to what this script actually does. The sales to capital ratio, it's pretty similar to the return on invested capital ratio, but you're using sales instead of operating income or net operating profit after tax, whatever. So it's kind of the similar concept. It's basically how much sales does a company generate for each dollar of capital that is invested back into the business. And it goes 5 years back. So it tells you what the current value is and then what the value is as of 5 years ago, or each year going back 5 years. So it calculates it 5 years back. And again, you can view the code in public scripts here. And I would recommend watching the two introductory videos that I've posted on this channel if you haven't already, because I'm basically going to assume as I go through this that you at least watch the introductory video that I did, because I explained some basic, beginner concepts for those who have no coding background at all on, how to get started. So I'm going to assume that you at least have that fundamental understanding. So here is the code here, and I'm going to basically go into this tab, which is a separate tab. And I'm not going to write the script from scratch, but I am going to first type out a few things to kind of, go over some concepts. So I'll open up my scripts here and then hit new to create a new one. And I'll just name this one sales, sales to capital. And the category, so this is a financial metric. That's what we're doing here. It's another one of those custom financial metrics. So what it does, as you can see here, actually I'll open it up in the My Scripts view so you can see what it does. So sales to capital 5 years back. So this is where you can run it. And you can see there's a few inputs that we have here. So there's the name of them and the parameters. Basically, you just enter the ticker, right? So if I were to enter, say, Apple stock, and then click run, it'll tell me what the sales to capital ratio for Apple stock is currently, and then going back 4 years as well. So you can see it here. Current sales to capital ratio 1.79, what it was last year, 2 years ago, 3 years ago, 4 years ago, etc. So it basically just prints the output there. So what we need to do is we need to set up a script so that the user can enter a ticker. And then for that ticker, it will calculate the sales to capital currently and then going 5 years back. So as I showed in the previous video, in order to get something to appear here as kind of like data that a user can enter to be used in that script, what you do is to get the text to show up, you enter 3 dashes and then just enter whatever you want. So you could do ticker, or you could do enter ticker here, something like that. And then the way we define what that variable actually is in the script, so say the user enters Apple, we have to assign a variable to represent Apple or Microsoft or whatever ticker they enter for whichever company they want. And we do that by entering it in the brackets of the function run here. So function run signifies the start of the script, and then end is obviously the end. Right, so now throughout the script, whenever we refer to ticker, just the word ticker, we're referring to whatever ticker the user enters in that box that I just showed you when they're doing this script. So I'll go back to the code here. So, and then there's also the formula. So the sales to capital ratio, it's revenues divided by debt plus shareholders' equity minus cash plus unamortized R&D, which I'm not going to get too into, the technical aspect of this. So the unamortized R&D, I'll probably touch on that just slightly at the end. But for the most part, I mean, it's really revenue, debt, shareholders' equity minus cash. So because we're dealing with numbers, because we're trying to calculate what it is currently, and then in past years, we have to basically get data from past years. So the function that we use to do that is called get XBRL, right? So there's get XBRL latest, which retrieves the latest value, but get XBRL Doesn't necessarily retrieve the latest one. It can if that's what you want it to, but it retrieves basically the data from any past period. So we have to first define a variable to represent the past period. And if you look back here, this is kind of how we do it. So we'll start with how we define anything, which is local, and then we can call it today. So local today. So the variable today equals a function called, and this is a function that is already programmed into the website, which is get today day. Get today day. So this, you don't have to enter anything in the bracket here. You just have closed brackets at the end, and it basically just retrieves whatever day it is today, right? And then we have to go back 5 years. So what I'm doing here is I'm basically saying, okay, so that's what today is. Let's say we want a year ago, right? So I'll do P year, which is previous year or prior year, whatever. So in the prior year equals today minus 365. So this, it gets the value of whatever today is. So today minus 365 gets, the value, the day format of 365 days ago, so a year ago, right? And then you can just repeat the same thing as I did here for 2 years ago, 3 years ago, 4 years ago, 5 years ago. So I'm just gonna, it's the exact same concept. So I'm not gonna type everything out. I'm just gonna copy and paste this in. Okay, so now we have variables that tell us what each, the dates are. So we can basically retrieve data from these respective time periods. So the next thing we want to do is kind of just one by one go through this, the formula for it here, and retrieve all the data that we need. So the first one is revenue. So that's what I've done here. I've basically created, so I use the get XBRL latest function to get revenue TTM, which is TTM trailing 12 months. So this function, revenue TTM, is basically what will, it gets the revenue from the trailing 12 months as of the date that you enter. So if we use this one here, which is you can see it's the get XBRL latest function, the first one here. This basically retrieves whatever the data is as it currently is. Whereas, and I'll start by saving this as well. It's always a good idea to just make sure you save your scripts as you go along. And then, so say we want to get the trailing 12 month sales as of a year ago, then I'll type this one out. So we'll call this one prior sales equals, and this is where I introduce the get XBRL function. So the get XBRL function, it's the exact same thing as the get XBRL latest function, except you also have to enter a date to represent what time period you want to get this value from. So we want to get, whatever the value of the trailing 12 months revenue is for whatever ticker the user enters as of 1 year ago, which we already defined that here. So how do we do that? Well, we just have to enter the correct amount of arguments. So it's pretty much the same as get XBRL latest. So the first thing we do is we enter ticker because we want to get this value for whatever ticker the user enters, which we've already assigned that variable here. The next thing we do, and again, you can just hover over, if you're ever not sure, just hover over purple text here, which explains what it does. So int day, that's, the integer for the day, which we've already defined that in a variable, so it could just be prior year. The string segment, we talked about this before. Usually you just enter 2 quotation marks there, which is essentially entering nothing. And then the string value name, which this is the string value name that we want because we want revenue as of the trailing 12 months. And because it is text we're entering, you enter in quotations and then close the bracket. And then you just repeat, in order to complete revenue, you complete revenue for 2 years back, 3 years back, 4 years back. And now you have your variables defined for revenue. So I'll just copy and paste this in because it's basically the same thing, just repeat it again. And then we basically just do the exact same thing for all the other variables. We do it for debt. As you can see here, I've got the current debt balance, which uses XBRL, get XBRL latest, and then the debt balance as of, which by the way, we have a metric for that, which is debt. So debt is a metric we created to just make it more easily to get specifically interest-bearing debt. So any like long-term bank loans, long-term debt, short-term debt, lease obligations as well. Basically, any type of debt that has interest attached to it is going to be captured in debt. So if you want just a shortcut to get the total debt balance, you can use this one. So it's the exact same thing as we just did with revenue, except we're doing it with debt now. So I'll just enter this in. And the whole point of what we're doing here is we're basically defining the variables, right? So if we later on in the function, we can use the variable current debt balance, and this pulls the current debt balance for whatever ticker is entered. And then I do the same thing with equity, which we can use. You can use a few different things for equity. There's MM equity, MM book value. It's all the same thing. Same thing with cash. The name for cash is a bit more technical. It's this name here, cash and cash equivalents at carrying value. So I'll just copy and paste this in as well because again, it's literally the exact same thing that we just did with revenue. So there we go. We've got most of it defined now. And then the next thing, so this is the next function I wanted to enter. So part of this equation is research and development expense. So it uses the unamortized research and development expense. And basically how this works is, I guess whoever created this, I think it was Aswath Damodaran, who's a finance professor at New York University. I think he kind of popularized the method of adding research and development expense, but basically I'd imagine I haven't looked too much into this. I'd imagine it has something to do with the fact that research and development expense, although it is an expense, it's generally seen to provide benefits to a company years in the future. So that's probably why he's, adding the unamortized amount. And basically you would amortize every 20% of research and development expense every year. So I'm not going to get too into the technical definition of how it works, but basically that's what I have here. And the challenge with research and development expense and using it in here is that so basically all the data that we have in here is as of the most recent quarter, and that includes income statement data. So if you were to just, instead of using MM revenue TTM, just use MM revenue, that would be revenue as of the most recent quarter, which we want full year revenue, not just one quarter of revenue, which is why we're using TTM, but not every single income statement line item is going to have a TTM function or a TTM name that we've created for it. And research and development expense is one of those that we haven't created that for yet. So in order to make it easier, because one thing that you could do is say if you wanted to get research and development expense as of last quarter, you could you could create a function called kind of like what we did here. Like say you call it local last Q for last quarter equals today and then minus 90 because you could say the quarter is 90 days ago. But the problem is it's not always going to be 90 days ago. Sometimes it's 89, sometimes it's 91, sometimes it's 92. Like it's impossible to tell how many days ago a quarter was. So you can use this for years, but you can't really use it for quarters. So we created this function called get value for quarter offset. So what does this do? It's basically the same thing as get XBRL, except where you would enter the years or the time period, which would be right after ticker. Instead, you enter a number. And if you would enter the number 1, that would be as of the most recent quarter. Number 2 would be 2 quarters ago. Number 3 would be 3 quarters ago. And number 4 would be 4 quarters ago. So that's why this function here in the code, which I've defined as R&D TTM, so the trailing 12 months of R&D expense, is basically the sum of RD1, which is the value of research and development expense, which uses the one which has the most recent quarter, 2 quarters ago, 3 quarters ago, 4 quarters ago. And then you add those together and then you get the trailing 12 months value. So that's what RDTTM is. And then all this code here is just the same thing repeated. But because we need to basically go 9 years back or 10 years back of R&D expense to get everything we need in order to complete this function, because remember, what we're trying to calculate here is the sales to capital ratio currently and 5 years back. And because, as they described it, the research and development expense amortizes over a 5-year span, then we need to get 10 years back to kind of complete the calculation for 5 years back, if that makes sense. So if that doesn't make sense, don't worry about it. It's kind of just the technical aspects. Really what I'm trying to get at here and show you is how this function works. So I'll kind of type it out just so it's clear to everyone how it works. But basically what we've done so far in here is, we've defined all the variables we need except that last component of R&D expense. So say we just do local and we want to get RD1, which RD1 can just equal research and development expense from the most recent quarter. And then we use get value for quarter offset. and then it's turned purple here, so that's when we know that we've done it correctly. And then a bracket, so we enter ticker, and we kind of just follow the same format as get XBRL, except the only difference is instead of stating the years here, we would state the quarter value we want. So one would be the most recent quarter. We do that, and then again the double quotes, and then in quotes we'd enter the name of the line item we want, which this one's pretty self-explanatory. It's just research and development expense. So we have the quotes and then close the bracket. So that would give us, so RD1, we've assigned RD1 for this ticker, which, not all companies will have research and development expense, but for those that do, this would assign the variable RD1 to equal research and development expense for the most recent quarter. And then if you'd basically just repeat that as I did here several times. And this, this may look long and confusing. I mean, it's literally just the same thing, copy and paste it over, and then going in here and changing this number so it gets from the right quarter. So that's all this is. And then this is basically the calculation to bring in the amortized or the unamortized amount of research and development expense. So now we've basically got all our variables defined. And now what I've done here, and this is going to be the last lesson that I'm going to explain here. And basically what it is, so when you're trying to calculate a ratio or financial metric like sales to capital, keep in mind that you're comparing sales, which is a flow variable meaning it's a value that is accumulated over a period of time, right? Like when you see a value of a company's sales, it has a time period associated, right? It's, the sales of the last year, the sales of the last quarter, right? Whereas something on the balance sheet, like capital, for example, that's a value at a point in time, like how much cash a company has, how much debt a company has. That isn't a value that's accumulated over time. It's the value at a given point in time, right? Like at this date, the company had this much in cash in their bank account, right? You can't really do that with revenue or anything on the income statement because it's the value that's accumulated over a quarter, a year, whatever the income statement's showing you. So when you're comparing a flow variable like sales to a stock variable like capital, you have to take the average balance of the stock variable, right? So you would take capital, whatever the balance was at the beginning of, the period you're taking sales for. So we're taking sales as of the trailing 12 months. So we would get capital as of 12 months ago, capital as of today, add those together, divide it by 2. Therefore, we have an average, right? And then you would use that to and then do sales divided by, the average capital. So you have to use that for all functions that compare a flow variable with a stock variable, whether it's return on invested capital, return on assets, return on equity. That's how you calculate it. So that's basically what I'm doing here. I'm creating these averages for the denominator. So, the bottom of the equation. So, the capital of the sales to capital ratio. And I've got, the current average capital, which is current debt balance. And I like to name my variables like exactly what they are, even if they have to give them kind of long names, just because it makes it really easy when I'm working on it later. So the current debt balance plus current equity plus or minus current cash plus current unamortized research and development, which is what this is, which I defined right up here. And then I also add, from the prior year. So the prior year's debt balance, prior year's equity minus prior year cash plus prior year's research and development. And then I divide by 2. So now I have this variable here, which is current average capital. So this is going to be the denominator of the current sales to capital ratio. So we go to the next step here. Current SC ratio, which is sales to capital ratio, is current sales, which we defined way up here, right? Current sales divided by current average capital. And then I basically do the same thing, for the prior year, get the average. So the prior year, this prior year average capital, which is this variable here, is, prior year debt balance plus prior year equity minus prior year's cash plus prior year's research and development amortized plus what I've called 2 years debt balance, which is the debt balance as of 2 years ago plus 2 years ago equity, and you get the idea, right? I don't have to explain everything. And then I just repeat that exact same process to define what the final value is for the sales to capital ratio, right? The current one, prior years, 2 years ago, 3 years ago, 4 years ago. So I've basically done everything. The last thing I need to do is just print what the final result is. So I use println, which is the function that can print things. in quotes here, this is a text basically. So the current sales to capital ratio, colon, space, and then this, and then the way you kind of uh, you connect text to a variable that you've already defined in your script is just like this. You just two periods, and then you don't have to put the variable name in text because it's not text, it's a variable name that you've previously defined in your script. And then I basically just, type out each one. So the current one, which is here, prior year, 2 years ago, 3 years ago, and then 4 years ago. And that's basically it. So I know I didn't do a whole lot of typing. It was kind of a lot of copy and pasting, but I think it's better if I just explain what I did rather than just waste time typing it out, because really what you need to learn in this is just, the logic behind it and kind of how the functions work. And then once you kind of understand that, you can run with it and you can get creative in your own right and start making your own scripts. And ideally, share them and make them public so that other people and other users of the website can check them out and use them as well. So I hope you did find this useful. If you have any questions about anything I talked about, I'm sure there were some parts that are a bit more confusing than others, then please leave a comment and I'll respond to it and clarify things. And if you do have an idea for a script, then feel free to post on the Reddit page, which is just r/Tickernomics. And you can, we'll take a look at your script. And if we like it, then maybe we'll even create it and we can make a video about it as well. So thank you so much for sticking around, and I'll see you guys in the next video.